All right, what's going on, team? Okay, so here is our LYMG exclusive regarding risk management. All right, now it's important to understand this about risk management. With no risk management, you will not be a successful investor. You have to replace your excitement and replace anticipation with actual strategy, with actual process, with actual precision. So that's what we're going over today. Whether you choose to invest on a personal account, aka a cash account, or a funded, okay, there are two different types of, there's one set of rules for risk management, but there are two different types of philosophy, okay? So usually people who invest on a cash account, you're doing so because you probably don't have a lot of cash, or you desire to get paid quicker. You could pay yourself every day, depending on whatever type of account size you use. So let's say, here's what I'm a proponent of. I'm always a best of both worlds. If somebody asks me, do I want to invest in real estate, and do I want to make passive income from apartments or homes? I would say apartments and homes. I'll do both. So I like investing in the cash account and a funded account. And I would suggest you all do the same thing. That way you're just not anticipating with that funded and find yourself getting impatient when it comes to risk. All right. You invest with the cash account, you can pay yourself dang near every day. All right. Or every day. All right. So cash account, anything that's under $1,000. Right. Most people are going to, I would say, go anywhere between 10 to 20%, right? 10% to 20% per trade, just to make it worth your time, worth your while. Now, understand this. Here's why I say this, because look, if you start off a cash account with $100 and you say, okay, I'm using a 1% risk management, that means you're literally risking $1 per trade. All right. Now, in reality, you're not here to do all this marking up and to make $1. If you are, then God bless you. You have a lot of time on your hands, right? But you're probably doing a cash account so you can turn that 100 into 125 and 150 into 200, a 2 and a 3, 3 and a 4, so on and so forth, right? So you got to understand, when I'm doing a cash account, number one, my percentages are going to be higher. So I say anywhere between 10 and 20% per trade, right? So let's say you have $100. That means I'm going to risk, if I'm doing a 10%, that means I'm going to risk $10 per trade, right? If I'm doing 20%, I'm going to risk $20. Excuse me. Yep, $20 per trade, right? Very, very, very low, right? Some people might even be a little more on the aggressive side. Some people might go 30%, 35, 40%, so on and so forth. I would like to say start right there. You can start with anything as low as $50. But let's say between 10 and 20% per trade. All right. Now, when we go funded, it's totally different, because when we start with our funded, we like to start with $20,000, right? And so our goal is to go 1.5% per trade, and that would equal $300 per trade, right? Now we go 1.5% per trade, $300 per trade. What that does is it gives us wiggle room. So within a 24-hour span, we can lose 3 trades in a row and still not be stopped out, still not hit the daily loss limit of what? 5%. See, that's very, very important, and that's very advantageous to us. Now, of course, we trade around the 80% range, right? Some people even higher. So that's not really a concern. But when you're thinking about risk, you always want to do what? Gauge the lifeblood, gauge the lifespan of the money that you put in the market. So a lot of people, you get in investing and you start thinking immediately about profit, right? You start thinking immediately about profit, and you just start thinking, okay, I get a good trade set up, I'm excited. If I get in this, I can make more. You never look at the other side, right? So like it's like the good old school game. Somebody say I have good news and bad news. Which one you want first? Give me the bad news first, so I can get that out the way, and then the good news is going to overtop the bad news. You know what I'm saying? It's the same way with risk management. Let me get my risk management out the way first, and then from there, I can focus on how much money I can make. All right. Because we're always managing our risk, but we're putting a cap on our risk, meaning we're putting a cap on how much we can lose, but we never put a cap on how much we can make. All right. We never put a cap on how much we can make. If you know you're trading the right way, with all of your losses are the same. All right. So let's say you're trading at least 80%, which is excellent. By the way, now, if you're trading on a cash account at 10%, all of your losses should be $10. You see what I'm saying? There should not, and that's on a $100 account, there should not be a $52 loss, a $3 loss, a $4 loss, a $6 loss. That shows that you're emotionally trading. You're not managing risk. You're just playing yo-yo with your emotions and probably thinning your hair in the process if you haven't already lost it all. All right. Now, same thing over here with the funded. Every trade loss should be 300. Nothing more, nothing less. If you are doing the 1.5%, right? So now let's show a strategy that we like to use, because I like to work into the 1.5%, right? The more confirmations we have, the more we're willing to leverage. So if we just use that right there, check this out. Check this out. I'm going to show you how to calculate the actual risk in real time. So let's say that we saw this move and we decided to enter a sale, right? So let's say this is I'm looking real quick. Bam, bam, bam. Let's say this is our entry candle right here. Okay. Now we're going to have a two-part entry. Okay. First thing I like to do is give you choice. Give you choice, but not too overwhelming of choice. All right. I like to split my 1.5% up, especially this is on the funded talk. So I like to go 0.75%. Excuse me. Yep. I like to go 0.75% when we get an engulfing on the 15-minute. We get our confirmation on the 15-minute. And then we get the 1 hour confirmation into the other 0.075%. All right. Now I have more confirmation. So let's just say I enter on the 15, I get, and let's say chart makes a big move. So I'm on this sell, right? And the chart makes a huge move on the 15-minute because maybe some news influenced it or something. And it just goes, bam, it just goes down. Now I'm catching all of those pips. So by the time it goes on an hour, I'm already in there. And then now I enter again, bam. Or let's say, hey, remember, because we talked about it, we want to think about it being able to go both ways. So this is the best case scenario. It goes down, it goes on the 15, then it goes on an hour, I enter. But there are some cases where let's say something happens and I'm in a trade for the 0.75%, and let's say price goes this way. Let's say you didn't mark off an order block. Let's say you missed a mismatch or something like that. There was something that you overlooked. Price goes this way. Now you only lost half. So you lose small, but when things go your way, you win big. All right. You want to lose small, win big. You want to control your risk. All right. Control your risk. Manage your risk. Manage it. Right. So now let's see here. We're going to look at it in real life on a 15-minute. All right, let's see. Let's go here. Bam. All right. Get these out the way. Get these out the way. Okay, so in 15 minutes, let's say I ended off of this bearish engulfing. And let's say that I want to have here's my overall look. I want to be in this trade. Let's see. Short position. I enter right here on this 15-minute candle. Bam. And let's say I'm willing to risk 75 pips. I'm going to put my stop. Let's go 70 pips. I want a 2-by-1 trade. So I'm risking 70 pips. I see price is obeying some higher time frames, right? It's confluent on higher time frames. So I risk 70 and I want the whole 140, right? I want the whole 140 right here. Bam. All right, I'm gonna sit in this trade and just collect money, okay? So now, easy for you to do, by the way, simple for you to do. It just takes patience. Do the work once and love the reward. All right, so now on the 15-minute, I have a 70 pip risk. All right, now remember, I'm going to risk 1.5% per trade, right? So I'm going to split this up. So my first 0.75, how do I calculate that? How do I calculate that? First off, I have to figure out what this value is. 1.5 times 20%. Times 20K, right? So how do I do that? 20,000 times, I can just literally type in 1.5% on my calculator and it'll equal 300. On my cell phone, that's how I calculate the amount that I'm actually risking, okay? So if this was a $50,000 account, same thing, 50,000 times 1.5%, 750. If this was a $300,000 account, it doesn't matter. All right, 300,000 times 1.5% is 4,500. All right, so now I know how much I want to find out how much I'm actually risking, okay? Once I find that number out, I'm going to divide it by 2. So my total per trade I'm risking is 300. So the reason I divided by 2 is for my 0.75, 0.75% of 20K is going to equal what? 150. All right. So now all I'm doing is going, okay, I'm risking 70 pips. I'm risking 70 pips and $150. Okay. 70 pips is my risk in terms of pips. My risk in pips is $750. Excuse me. Is 70 pips. And my risk in dollars is $150. All right. Now, all I literally have to do is divide my risk in pips into my risk in dollars. Literally. All right. So to find out your lot size equals dollar risk divided by pip risk. Before you feel overwhelmed and go, oh my God, think, just stop. Stop for a second and literally think about the risk to reward. I've seen people go into factory jobs and work 8, 10, 12-hour shifts because you feel like you had to. Feel like you have to get this. Don't tell yourself I'm not good with numbers. Don't tell yourself. Think about this. If you take just 5 to 7 minutes a day and just work on calculations, you'll be good. You'll be good by the end of the week. You can't go work a factory job for a week and think, okay, cool, now I got my house paid off. All right. But you can learn how to trade. You can learn how to invest. And in a year, your entire life can change. But you have to put some time toward it. And you got to stop putting people in a situation where they got to care more than you care. All right. So your lot size. So now that you're no longer overwhelmed, your lot size is going to equal your dollar risk divided by your pip risk, right? So now, if my pip risk is what? $70, 70 pips, my dollar risk is 150. I'm going to do 150 divided by 70. All right. 150 divided by 70. And when I do that, I'm on my calculator as we type. That's going to give me 2.1. That means I'm going to be risking $2.01 per pip. $2.10 per pip, excuse me. $2.10 per pip. All right. So here it is. 150 divided by 70 equals $2.10. $2.14, but they're not going to give us 2.14. So for my lot size, I'm going to put 0.21. All right. So now let's clean this up so that you have the formulas that you need here on your left. All right. I hope you're writing this down. You'll have the formulas that you need here on your left. All right. To calculate pips, to calculate risk. Calculate your lot size, so risk in dollars divided by risk in pips. All right. And that's going to equal your lot size. This is super important. This is super important. All right. Now, also just basics for the lot size. Every 0.1 equals $1 per pip. 1.0 equals $10 per pip. 10.0 equals $100 per pip. 100.0 equals $1,000 per pip. All right. So now you know how to move, you know what we're talking about. So that $2.1 a pip, that's going to translate to a 0.21 because $1.01 equals, 0.1 equals $1 a pip. So 0.21 is going to equal $2.10 per pip, right? So my lot size for this trade, when I open it on my 15-minute, my first lot size right here is going to be what? 0.21, you guessed it. All right, I'm just gonna put it right here, 0.21. And that's a 0.75% risk. All right. So now that's the confirmation of our 15. So now we need the confirmation of our hour. For our hour, we're going to get right in. Luckily, I'm not going to say luckily, we didn't get a huge move. We didn't get huge movement on an hour. So now after that hour confirmation happens, after it then goes on an hour, bam, we enter right here. We're going to see how many pips away this is from our stop loss. And here's another thing too. We could use our original stop loss. Now let's put that right at 75 pips, just for math's sake. All right. Now, This is this is sauce, y'all. Because watch this. Now, remember, we're going to enter the rest of 0.75%, which equals what? If we're on a 20K account, that equals 100. That equals yeah, $150 right there. All right. So now check this out. Check this out. This is super sauce. We're risking in pips. We're risking what? $75. We're risking what? 75. I mean, excuse me, 150. That's clean math. 150 divided by 75 equals 2. So our lot size is going to be what? You guessed it, 0.2, right? Now we're running. Now we're with it. But let's say we get this right here. Let's say we get such a, the market is with us, the news is with us, everything's looking good, things are confluent, and we get that risk, we get that hour engulfing. Here's where the sauce part comes in. Oh, this is where you should have to pay extra, but hey, I'm gonna show love today. Now, let's say I notice my high points are getting lower, right? And then I get the engulfing. Price is respecting this order block. So it's also respecting this order block, which is respecting this order block. Now I put my stop loss lower, above one order block, 2 order blocks, right above there. I do this if the news is already going my way, the trend is going my way, everything is flowing my way, the market is giving me confluence. That's when I do this. If I do not have the news flowing my way, if there's turbulence and the chart is going back and forth, I did not get the 1 hour engulfing, I don't do this. I only do this when the news is flowing my way, right? And I like to say too, when the rest of the day is quiet, meaning there's no news coming out for the remainder of the day. Now I can trade in peace, right? I don't have to worry about herky-jerk movements. If there's no news coming out for the rest of that session, I'm good. So I get the 1 hour engulfing, the news is flowing my way, the rest of the day is quiet. I can now lower my stop loss. So look, I'm going from a 70 plus pip stop loss. I'm gonna keep that one for my first trade, right? I'm gonna keep that one for my first trade that I put in on the 15-minute. But then for the hour, because we have more confirmations, we have more information now. I'm gonna put my stop loss right here. And for the sake of math, let's call it 40 pips. So now watch what this does to my lot size while I'm keeping my risk the same. Watch what this does to my lot size, right? Now, everything changes everything stays the same except one number. 0.75% still equals 150, right? But now my pip risk equals 40 instead of 75. And my dollar risk is still 150. So now I have 150 divided by 40 instead of 75. And look what that does. Look what that does. 150 divided by 40 equals 0.37 or 38. That's what my lot size is going to be. So now that's $3.70 per pip versus $2 per pip. I dang near double just from having more confirmation. So now look, on the 1 hour, more confirmation. Watch this. Watch what happens to my trade now. Watch what happens to my earnings. You can see 0.37. So I go ahead and get, if I just would have kept it the same, let's say I would have had a 0.21 and a 0.2 for my original entry points. 0.21 plus my 0.21, that would have went and got 140 pips. That equals what? $2.10 times 140 equals 294. I would have made $294, right? You made $294 just off of that trade alone. That's half the trade. Now my 0.2, it would have gotten, let me see, 135 pips because it started off five pips lower. So my 0.2, this is after 1 hour confirmation, times 135. $2 times 135 equals 270. Now, 270 plus 294, my total equals 564. Now, off of 1.5% risk, we end up making well over 2%, right? Well over 2%. That's what I mean. We manage and we cap our risk, but never our profit. So that's just off the original. Now, look at this. When I change this to 0.37 times 135 pips, watch how these two numbers go up. So I changed my stop loss. I lowered my stop loss using strategy, not emotion, not because I got greedy and said, oh, I'm going to put a 5 pip stop loss so that I could use the biggest lot size. No, I saw that the highs were getting lower. The order blocks were forming. They were literally forming staircases that's stopping price from going up. So I put price up 2 order blocks above. I put my stop loss 2 order blocks above price. 1, 2 stop loss above here, right? So it has to go through 2.5, 3 obstacles to stop me out. And all the momentum is going my way. The news is going my way. The charts are going my way, all right? So let's see. Now we do $3.70 times 135. That alone equals $4.99.50. So 294 plus 4.99 now equals 793.50. We go to over over 3.5%. All right, if my math is correct. Yep, we go to over 3.5%. We go from 2.5% to 3.5%, just from knowing how to calculate lot size. All right, just from knowing how to calculate lot size. Okay, so now with everything I like to do a quick review. I like to do a quick review. So we put it all together in the end, okay? Put it all together in the end. All right. Remember, more confirmation equals more confidence. More confluence equals more confirmation. More confirmations equal more confidence, right? The more confidence you have, the more capital you make, the more money you make, all right? All right, so now 2-minute drill, 2 minutes or less, all right? Let's get it. Okay, so how do we calculate? Let's say you're working with a $20,000 funded. Let's say you're working with 20K funded. How do you calculate your risk? You want to do 1.5% risk. What do you type in your calculator? What do you type in your smartphone? You gotta type in 20,000 times 1.5% equals 20,000 times 1.5% equals 300. What does that 300 mean? That's the amount I'm risking per trade. All right, bam. That's the amount I'm risking per trade. Now over here, how do I calculate? Okay, I know I'm risking 300, but how do I calculate lot size? So to calculate lot size, I'm going to take, I already know how much I'm risking in a trade, right? And we showed you how to break it down into getting the engulfing or getting the confirmation off the 15 and getting it on 1 hour. You divide it 0.75, 0.75. But for the sake of the 2-minute drill, we're just going to just do the whole 300, all right? I'll do the whole 300 in this one. So how do I calculate lot size? I'm going to take my pip risk, my risk in dollars, and divided by my risk in pips. Okay, so what does that mean? My risk in dollars always remains the same. So in this case, 300, right? 300. So if I'm dividing it by, let's say I'm risking 50 pips, look how easy this becomes. That's $6 a pip. Let's say I'm risking 40 pips. And I like to, you see how I'm using round numbers? I'm not going to go 27 pips, 35 pips. I'm going to round up to the nearest 10. If I'm risking 27 pips to be exact, I'm going to round up to 30. If my risk is 34 pips, I'm going to round up to 40. My risk is 53 pips, I'm going to round up to 60. So now let's say I'm risking 40 pips on this one. Now that's going to be 7, let's do the math, 7.5. It's going to be $7.05 a pip. That's a 0.75. 0.6, 0.75. Let's say I'm doing $30 a pip. Let's say I'm risking 30 pips. You guessed it, $10 a pip. All right, let's say I'm doing, you get the point. Let's say I'm scalping and I'm risking 10 pips. That equals what? $30 a pip. All right, so now look, bam, that's how you do it. Don't be intimidated. Don't be intimidated by it. Take 5 minutes a day and do this. And if you keep that number the same, all you have to do is find out, if you're on a funded, what's my 1.5% of my funded? So even if I'm on 100K, okay, 1.5% of 100K is 1,500. All right, did I do 1,500? You could literally make a risk management table. I can do 1,500. Matter of fact, make a risk management table. That's the easiest way to do it, so that you actually have a document, because you're dealing with life-changing money. When this goes right for you, it's going to be life-changing. So why not take 20 minutes out to do risk management table that you can forever use? That's evergreen. That's something that you can forever use. So the thing with wealth is that we want to get used to doing things once that continue to pay us forever, that continue to pay dividends forever. That's how we want to think, with the mindset that most of us have, or most of us come from, which is a worker's mindset. And I'm not saying anything bad about anybody who comes from that, but the truth is, where we come from, it's the more I do this thing, then the more money I see. With wealth building is, when I do it right, it pays me. And it keeps paying me. I want to do something once and keep getting paid. So you can literally take out 20 minutes today. And for everybody who's in LYMG who sees this, let me know when you did it, when you've done it, show me, and I have something for you. I literally have something for you, all right? So look, if I'm on a 100K account and I know I'm risking 1.5% per trade, that equals 1,500, right? That equals $1,500 that I'm risking. I'm going to do a risk management chart for 100 pips, 90 pips, 80, 70, 60, 50, 40, 30, 20, and 10. And then you're done. One time and you're done. So no matter where you're at, even if you're on the go, let's say you break it down by the 15-minute an hour. Okay, the first 15-minute confirmation I got, I'm risking 45 pips with that. All right, so good. Look, bam, bam, go right to your computation for the 50, right? All right, cool. I'm going to put in my 50 pip lot size risk. Bam. And then on the hour, let's say now you're in the sale, it went down 15 extra pips. So now you'd be risking 65 pips, right? Bam, put in your computation for 7. And that's it. And now you're done. And sit back, and you know your risk is solid. and you trade. So go ahead. You have to take the initiative. You have to take the initiative, all right? So you have to, faith without works is dead. So everybody does all the affirmations. If you can't take 20 minutes out to do this, you're going to take 40 minutes out, 40 hours out your week to do whatever somebody else wants you to do. And you just get used to that. All right. Until you get sick and tired of being sick and tired, you take 20 minutes out, you do this, you ask questions, you leave comments under this video. If you have questions, we'll address them for you. All right. But that's what this is for. It's a community. It's community. If you need help with it, let's make it happen. But don't be afraid to get the help. Don't be afraid to take your leap of faith. And don't be afraid, to join for those who are already in LYMG. Don't be afraid to reach out for one-on-ones, to pay for the education. That also says a lot about you. Are you willing to pay for the education, or do you try to get as many freebies as possible and devalue the education? Because if you devalue the education, how can you value the wealth that comes from the education? So you devalue your potential to get the wealth that comes from education. You don't devalue the other person. All right. So anybody who's seeing this on a public YouTube forum, take your leap of faith. Come tap in with us at LYMG. Everything is in the description. Links and everything are in the description, but we'd love to have you. We're a very personable group. Look forward to it. Look forward to seeing you on the inside. Love y'all. Let's get it. I hope this helped. If this helped you in any way, drop a comment under this video. All right. This will be public. So for all of our LYMG members, don't comment in the chat per se, but drop a comment under this video if this helps you. All right. Like, subscribe, share, all of this good stuff. We gave some actual sauce today. Some real sauce. All right. Let's get it.